Welcome to Unleash the Awesome with Dave Gambrill. All of us have unique skills, talents, and abilities that aren't being used to their full potential. Our mission is to share the people, tools, apps, and other resources that will help you unleash your awesome on the world.
Yo, what's up? It's Dave. Welcome to another episode of Unleash the Awesome. Today, let's talk about cryptocurrency and blockchains. Distraction or opportunity? And the answer is yes, both distraction and opportunity. So if you don't want to listen to the rest of this, there you go. It just saved you a lot of time. But I think for a lot of you, you're wondering, like, what is all this hype and craziness around cryptocurrencies and blockchain? What even is it? And so in this episode, I'm going to help demystify that. But before we get into it, a little disclaimer. I am not a financial or legal or tax advisor. Any of the information that's presented in this episode is strictly for informational and educational purposes only. Cryptocurrency is a volatile and risky asset class. Make sure you do your own due diligence before you do anything, and do not construe anything in this broadcast or this conversation as specific guidance for you. Again, do your own due diligence before you take action. Additionally, those of you that have been around the crypto space for a while, this is geared towards people that really have no idea what it is. So I'm going to take a little bit of liberties with my examples, my metaphors, the way that I explain it. I know that they're not all technically correct. No need to send me messages and let me know about it. Okay, I know. I'm just trying to make it as simple as possible so we can onboard more people into this really amazing opportunity. So let's talk about it. What the heck is cryptocurrency and a blockchain, and why does it matter, and what should you be paying attention to? And I'll give you a little foreshadowing. The thing that I'm most excited about are smart contracts, but we'll talk about that in a few minutes. Okay, let's talk about cryptocurrency and blockchain. What the heck is it? I want you to think about Bitcoin. We'll use it as an example. And if you want to go read the paper, I'll make sure I put a lot of resources in the show notes for you, but there was a 10-page PDF by Satoshi Nakamoto, who is it's a pseudonym for the person that invented Bitcoin, and it just explains how it works. But I want to explain to you generally how Bitcoin and the other cryptocurrencies work, okay? Imagine if you went down to the town square, okay, and you wanted to give somebody $100 of U.S. fiat currency, of U.S. dollars. You wanted to give somebody $100. And imagine you went down to the town square and there was a ledger there, a book, a journal, right, or a public ledger. And you went there and there were other people milling about in the square, and let's say you wanted to give Joe $100. So you would go there, you would say, okay, I'm going to give Joe $100. You would hand Joe the $100. You would write in the public ledger, I just gave Joe $100. You would initial it or sign it. He would initial it or sign it. And then you would pay an additional $1 fee to the upkeep of the public ledger, of the book, of the journal that's there in the town square. And then what would happen is other people who witnessed that transaction, who validated that a transaction took place, could initial it as well and claim some of that $1 fee. So let's say there were 5 people watching it, and they all initialed the fact that the transaction took place. Okay, they verified or validated that that transaction took place, that you gave Joe $100. And so they all took, since there was 5 of them, they took 20 cents in this example, okay? The blockchain, and Bitcoin in particular, is very similar, right? So the blockchain is just a public ledger that's in the cloud, essentially, okay? It's available. You can see it. You can scan it. You can go to websites that show every single transaction, which is why people call this decentralized, meaning it's just, there's no government agency that owns it. There's no bank that owns it. It is out there for everyone to see and validate and audit if they want. And so that's what a blockchain is. The transactions are taking place on a public ledger. And the way they're recorded, right, it's called a blockchain. And there are math problems or calculations that are getting solved by computers that help validate that the transactions took place. Very much like those people who initialed the journal or the real ledger that was in the town square and claimed their 20 cents. What happens with a transaction on a blockchain is Same kind of deal. You want to give somebody $100 of Bitcoin. You say, okay, here's what we're going to do. Here's $100. And then you'll pay a fee, a gas fee, a transaction fee, whatever you want to call it. It's called different things on different blockchains. But let's use the same example. You gave someone $100. There was an additional fee that was on top of that. It was $1. And these computers will compete against each other to see how fast they can crack a code or a math problem to help validate that transaction took place. And after a certain number of computers validate it, then it's considered confirmed on the blockchain, okay? And in this case, just again, to keep the math simple, let's say 5 computers validated it and they each got 20 cents. Those computers are known as miners. Those people are mining Bitcoin in this case. And so that's where they're claiming their fees. That's where they're getting their 20 cents in this case, or earning their keep, okay? This is called proof of work. There's other things called proof of stake. That is a super, super simplistic look at how it works. But the reason why it's so successful is the way the economics of it work is everybody that's participating in this particular currency is essentially motivated by the economics of it, right? Everybody wants to have it succeed. And so the computers continue to work and make sure that everything's going. And have there been problems with some of them? Yes. But they have gotten worked out. And that's why they're so popular now. Big institutions are starting to roll into some of these cryptocurrencies. Okay. So in a nutshell, okay, when you are transmitting a value, currency, money on a blockchain, that's all it is. Okay. It's being put out there. You can go look at these things. I'll put links to the different ones that are out there. But that's how Bitcoin basically works. Okay. There's another one called Ethereum that's a little different in that you could still exchange Ethereum, just like I mentioned for Bitcoin, similar thing. But Ethereum is a little different in that it has, you can build things on it. So I think about Ethereum kind of like Lego blocks. Okay. So you can build apps, you can put contracts, smart contracts on there. So there's people that are building apps, they're called decentralized apps on Ethereum. And these contracts, smart contracts, basically you're just writing these contracts that say, when this happens, when this kind of money changes hands, if somebody gives $20 or it can be triggered by a number of things. This date happens and there's so many people that are invested in this certain thing, we're going to reward them with extra tokens, whatever. There's a lot of things you could bake into a smart contract. But the reason why I'm so excited about smart contracts is that they have the potential to really up in the apple cart, if you will, or disrupt a lot of things that happen in a financial ecosystem, right? So if you think about basic transactions, like let's talk about houses in the United States. If you were to buy and sell a house, right, there's like anywhere from 6 to 10 different people on each side of that transaction, or businesses, right? So there's 6 to 10 businesses and probably, I don't know, maybe 100 people when you work it all out between the mortgage and the underwriters and the bank and the inspectors and the people at the town hall to record the transaction, all that stuff, right? But a lot of the people on both sides of the transaction are really there just to validate that a transaction took place and that someone has enough money to have this transaction happen, to validate that, and then to validate that the actual transaction took place. Yes, there are a lot of people that add value in that thing, right? They tell you how to stage your house and all this other stuff. But for the most part, a lot of it is just validating that transaction happened. So imagine if you could put a lot of that stuff instead on the blockchain, right? On the Ethereum blockchain or whatever one happens to have the smart contract on it. And it just says, yeah, Dave sold his house to Joe for this amount of money. And here's the transaction right here. And you could see it. And like, what if you could have smart contracts set up in order to much more easily transact and buy and sell properties like that? That would be pretty cool, right? So that's Ethereum. Okay. And then there's all kinds of other things that have come on board to help with that, because Ethereum, because the transaction fees are getting high and whatever, there's been all kinds of other things that have come along like Polygon and some other ones that do similar things. So you can have smart contracts on them and everything else. But for our conversation today, just know that there's Bitcoin and then there's Ethereum where it's like Legos and you can build these decentralized apps on it, and sometimes referred to as dApps. And there's a lot of utility there, okay? And again, there's a whole bunch of other ones out there now, Polygon and some other stuff. And then the only other thing I want to share is then there's also coins called stablecoins. Okay, so if you think about US dollar coin, USDC, you have one USDC, one US dollar coin, that is equal to $1, one United States fiat dollar. Okay, it's pegged to the dollar. Those other ones, Bitcoin, Ethereum, lots of the other ones, aren't tied to anything in particular. That's why they tend to go up and down. But the US dollar coin is pegged to the dollar. The reason why that is important is if you think about all the stuff that happens in a traditional financial system, which you probably don't ever think about since you had civics or history or economics class in high school or college, there's a lot of stuff that goes on. And if the cryptocurrency world, the decentralized currency world, is going to try to replicate everything that happens in a, quote, regular financial thing or regular financial ecosystem, there's a lot that goes on and there's a lot that has to happen. And you have to have all of these things, stocks, bonds, the liquidity, like all of that stuff. Right. And so, yeah, there are bonds in the cryptocurrency world. There are not exactly stocks, but there are these things called DAOs, decentralized autonomous organizations, which are essentially kind of like companies, except they don't have a CEO and they don't have stocks, but they do oftentimes issue their own tokens, and you can vote on the governance of these things based on how many tokens you have, just like you would based on how many shares you have in a publicly traded company if you own stock in it. So like all this stuff is trying to happen in the cryptocurrency world, in the decentralized finance world. And so you need all these other things to have. You need these smart contracts. You need to have these stable coins in order to facilitate transactions and have liquidity. There needs to be market makers. There's all kinds of sites that allow you to swap different kinds of currencies, and they take a percentage of it, just like you would if you were doing foreign exchange, right? You were changing one currency like US dollars to the Japanese yen, right? There would be a middleman there, a middle person that would do that for you, but they would take a fee. Like all of this stuff is being built up now in the decentralized finance world. And it's really, really fascinating. So if you want to do any of this stuff, like if you just want to buy and sell and you want to see what it's all about, and you want to kind of dip your toe in the water, Coinbase is a good place to do that. It's the most simplistic, I think. It's the easiest to onboard to. I'll make sure I have my referral link for that in the show notes. But again, do your own due diligence. I'm not making any recommendations on what you should buy or sell. What I tend to do is dollar cost average, meaning I'm just buying stuff on a pretty regular basis. Although occasionally, like has just happened recently here, I'm recording this in January of 2022, there's been a little bit of a hit to the market. And so, as Warren Buffett has famously said, buy when there's blood in the streets. So I have added to some of my positions because they've gone down in the last few weeks. So, ideally, the smart people, if you could time it up, you buy low and you sell high, right? Anyway, Coinbase is a good place to start. And then you might need a different kind of wallet to take advantage of some of this other stuff I'm going to talk about. You might want to check out Metamask. It's one of the more popular ones. Again, I'll put the link to that in the show notes. Okay, so we have talked about Bitcoin and Ethereum and stable coins, US dollar coin, how to get started if you want to play in that space, Coinbase. You might want to get a Metamask wallet. But then there are these other things that are happening that are super fascinating. They take all of these things into account and are, taking advantage of a DAO governance structure, organization structure, right? Decentralized autonomous organization. They are taking advantage of some of the liquidity that needs to be built and buying some of the stocks and being able to profit from the dividends and the interest that's happening in this space. And so then you have these people coming along, and one of my favorite decentralized autonomous organizations, or DAO, is known as PoolTogether. And I'll make sure that link is in the show notes for you. This amazing DAO is set up so that they have something called a no-loss raffle or no-loss lottery. The way it works, because it's based on smart contracts and some other stuff, and this is just a basic high-level view of it, is you invest your currency, and you can invest all kinds of different ones, and they have all kinds of different ways to do it, but I tend to do US dollar coin on the Polygon blockchain. but you could still do it on Ethereum and some other ways. But what you do is you invest your money in there. And let's say, for simple math, you invest $100 with PoolTogether. You put it in their pool. That's why it's called PoolTogether. You put $100 in there. And what happens is everybody else is pooling all their money together and PoolTogether, and there's millions of dollars invested in it. And like I just mentioned to you before, all of this financial ecosystem has to be built. And so there's bonds and other investments that are happening. And you can actually earn some pretty significant interest or dividends. But if you were only investing $100, you wouldn't get a lot, right? You get like 0.00 whatever percent, or like a very small, like micro fraction of something, right? $100 is not going to get you very far. But in something like PoolTogether, what they're doing is you put your $100 in, and everybody else puts their money in, and every single day they have a drawing or a raffle or a lottery, whatever you want to call it, where at this point, and this changes based on the governance and people voting on different allocations of prizes, but right now there's about $17,000 in prizes that are awarded each day to people who have invested. And so the way they're making their money is they're buying bonds and other instruments, other financial instruments in the crypto space. And in some cases, and some of these other DAOs are doing it, they're buying stuff in the quote real world or the traditional financial space. And they're taking all those dividends and all of the money that they're earning in interest and all that stuff, and again, paying it out to either their token holders, or in this case, PoolTogether, which yes, technically you will hold on to a token as your lottery ticket, if you will. But the way it works is each day there's a drawing. It's roughly at 2:30 Eastern time, and you can win prizes. And the prize pools change. Again, they just had a vote on it recently about they want to change it a little bit, but there are, hundreds of prizes at $2 or $1, $5, $10, $20, things like that. But then there's a couple prizes each day that are a few $1,000s, $2,000, a couple at $1,000, a couple at $500. I forget what they just voted on. Moving forward, it's going to change slightly, but the idea is you could put your $100 in and you could win $2,000 like within a couple days. Again, it's a raffle, it's a lottery, it's based on risk, and it's based on odds and chance and things like that. But here's the cool thing. Let's say you don't win today, and you just leave your $100 in there. There's a drawing tomorrow, and let's say you win a dollar. Okay, so now you have $101 because you just decide to invest that $100 back, or that dollar back in, right? So now you have $101. You just let it ride for a couple days. You don't have to pay an extra $100 each day. Just that $101 now is just sitting in there. So the next day goes, you don't win anything. The next day goes, you don't win anything. And then maybe the next day you win like $5. So now you have $106 in there. And you let that ride for a while, let that ride, and then maybe don't win anything else. The cool thing about this is when you decide you want to pull it out, you pull it out and you haven't lost anything. That's why it's called a no-loss lottery or raffle. Okay, so now based on the example I just gave you, there's $106. You decide, 2 weeks from now, you're like, I need this money, I want to take it out. You take it out. Now, it's cryptocurrencies, so you're going to pay fees, gas fees or whatever, transaction fees to get it. But essentially, you're going to get all of your $100 back and plus all of your winnings back. So in this case, $106 gross, right? Who knows what it'll be net after the transaction fees. It depends on what blockchain you have it on and everything else. But that's pretty neat, right? Because you never lose your initial investment. That's, if you were to play, like I live in New Jersey, you were to play the New Jersey lottery, you go spend $10 on the lottery and none of your numbers hit, you lost $10. If you want to play tomorrow, you have to invest another $10. The thing about PoolTogether is you could just have it sitting in there and earning chances to win each day. So what I do, again, this is not specific advice for you. Do your own due diligence, talk to your own financial and legal people, but I took some of my money that's in my emergency fund, right? Different financial advisors recommend you have 3, 6 months, maybe a year's worth of, cash on hand or emergency fund or whatever. I had some of that sitting in the traditional bank, getting me nothing, earning me nothing, right? Like 0.25% interest or something. So I'm like, all right, what if I could take some of that and just put it in PoolTogether? Because the risk, again, cryptocurrency is a volatile, risky thing. And so take that under consideration when I say this, but like doing the PoolTogether thing, it's relatively low risk in the grand scheme of things. I put a couple $100 in and I let it ride for a while. And then if I need it, I take it out, $200. And if I've won anything, I take that too. And my chance of getting something there, earning something there is much greater. Right? There's other things you can do. There's high interest accounts where you can put some of your stable coins or even your Bitcoin and Ethereum where you can earn 9%, 5%, 6%, whatever. I use BlockFi for some of that. I'll put that link in the show notes for you as well. But the point of this is there's so many cool things. So I started this with cryptocurrency and the blockchains. Are they a distraction or are they an opportunity? And yeah, there are a ton of opportunities like this PoolTogether. There are other things that are happening that are trying to take the real world into the cryptocurrency world. I'm not going to get into them now because this episode is going to go way longer if I try to talk about all of them. But there's one called DIMO, which is basically taking your driving data. You can opt in and to share the driving data with your car. If you have a more recent car, you can hook up to it without any extra hardware. If you don't have that, you can get their hardware and share this data. But the beautiful thing about this is if you think about, and again, DIMO is another DAO, Decentralized Autonomous Organization. They are building a data set that you have opted into. So if you're using something like Waze right now or Google Maps or Apple Maps, or if you think about Uber and all the data they're collecting from people driving all over the place, you don't get one dime. You don't get really any benefit other than the utility of the app. You don't get any benefit for sharing your data. What DIMO is doing, which is pretty fascinating, is they're going to allow you to opt in and share your data. And then if people want to use that data, if companies want to buy the data, and again, it'll be aggregated and there'll be privacy things. So they're not looking exactly at your driving data. But companies like, I don't know, let's say McDonald's. If McDonald's wants to know where to put a new franchise, if they could pull all that data, all the traffic data of all these cars, that's very helpful to know that if we want to put a McDonald's at this intersection, that there's a lot of traffic there at breakfast time, at lunchtime, at dinner time. Yeah, we want to put it there. But Uber and Waze and all these other companies, they're holding that data set privately. They're not typically sharing it with anybody. If they're sharing it for, they're sharing reports. They're not sharing the whole data set, and they're sharing it for millions of dollars. That's not really accessible for a lot of companies, smaller companies, obviously. So what DIMO is doing is saying, okay, what if we could track cars, and their ultimate goal is to be able to track everything. Like you think about those electric scooters and some of the other stuff that's going out there. But like, what if you could track the movement of all of these things, right? And what if I could benefit by sharing my data set? Because what will happen is if people want to buy the big data set or the global data set, they're going to have to pay DIMO. And what DIMO will do is based on you sharing your driving information, which you're doing anyway, I'm telling you, through these other apps, you're going to get tokens or a cryptocurrency basically in return. And who knows what those will be worth. The market will figure that out. But pretty cool, right? Because right now you're not getting paid anything to share your data with these other apps. So in this case, you can choose to share it and get paid, right? This is the whole decentralized piece because, again, DIMO is not a company. They're not a corporation. They're not a government. If you decide you want to participate in it, you become one of the people that can vote on what they're going to do with it, which is pretty cool. And also, which I didn't mention, PoolTogether, DIMO, a lot of these other ones, you can, if you contribute to what they're doing, right? You could join their Discord or their Telegram or, follow them on Twitter, but a lot of it tends to happen on Discord. You can, if you have some marketing background or some programming or engineering background or whatever, and you want to help these organizations, in many cases, what they do is they reward your efforts, the things you're doing, right? Because it's essentially like a volunteer thing. But because they have their own treasuries and they have their own currencies or tokens, they can reward you for doing stuff. So if you're helping with the marketing or helping build out their app or whatever, like depending on how they do it, they're all done differently, but every week or every 2 weeks, they might reward you with some of their tokens, which again, who knows what they'll be worth, but in some cases they could be worth a ton and the market will dictate that as well. Right? So there's like a real world to blockchain or, decentralized DAO thing, right? PoolTogether is pretty much everything happening online. You could, yes, take your fiat currency and play or invest or get a chance to win in PoolTogether. But there's so many amazing things going on. And so I think things like that, because again, these things are running off smart contracts on the different blockchains, there's so many cool things that could happen. Like we have only scratched the surface with these. So to me, that's where the opportunities are in these. And I just saw an article. I'll see if I can pull it up. I think it was in the New Yorker today. I didn't read the whole thing. I saved it. And I was like, wow. But the title was something like DAOs are the new future, or DAOs are where the opportunity are. And I'm like, or the opportunity is. And I was like, yeah, that's what I've been thinking about myself. So that's where I'd be focusing. I'd be looking at smart contracts, some of these DAOs or decentralized autonomous organizations, some of the opportunities that are happening there. There's one called Klima, where they're working on buying up carbon contracts so that they can try to make it cost prohibitive for companies to just buy carbon credits. They want to drive up the price of those carbon credits so the companies actually have to stop polluting instead of just offsetting it with credits, which is pretty cool. So if you're environmentally minded and you want to put your money into that, you could invest in this thing with the idea of buying these carbon credits and playing in that game, which is pretty cool. But again, super risky, volatile, do your own due diligence. But it's kind of neat where you could put your money where your beliefs are, put your money where your mouth is, and be an active participant. Some of these things are so new that you could become essentially like on their board of directors, because if you participate and you play along and you help and you add value in sometimes the simplest ways, just helping to moderate their Discord channel or whatever, but you can kind of get in on them. I don't like to use this term, but people are familiar with it, kind of like the ground floor of some of these things, because some of them are going to take off. And if you were in at the beginning and you were getting some of the tokens early and you were adding value early and whatever, like you're going to benefit both personally just from doing cool things, but also financially. You have an opportunity to do that. Let me also say, though, that many of these things are going to fall flat on their face in spectacular fashion. And so you just got to be aware of that as well, right? I think a lot of this, like when the internet first got popular and we had our first like .com bubble and then crash, like there's a lot of stuff just being thrown at the wall right now to see what will stick. And I think some of the things I've mentioned here are things that have real world application. They're benefiting people. Like think about PoolTogether. It's helping people, incentivizing people to save money, right? And whenever they need to take it out, they can. DIMO is working on, building a data set of things that are moving all over the place so that companies can buy in and get that data and make better decisions. So it's really, really some amazing things going on. Now, are there distractions in the space? Yeah. There are so many like meme coins and other things. Like everything I've talked about so far in this conversation has been about utility. When I tend to look at stuff in this decentralized finance space or the cryptocurrency space or blockchains or whatever, I tend to look at things that actually have some utility. So yeah, there are other things like Dogecoin and Shiba and all these other things that are literally just being driven by hype. There's really no utility for them. Many times you can't even spend them anywhere or do anything with them. Not to say that's bad. Like if you want to play that game, that's cool. But I tend to look at stuff that has utility and will tend to have utility in the long term. And if I can get in early, if I can get in kind of before the tipping point, even better. So yeah, there's a lot of distraction. Yeah, there's a lot of distraction around NFTs. You probably heard that term, non-fungible tokens, where people are selling all of these. There's one called Bored Ape Club and some of these other ones where, CryptoPunks, where in my opinion, it's just people who have a lot of money it's like buying art. Okay. If you weren't buying art before, or you didn't have the money to buy art, like a painting before, you probably aren't going to be in the space or be interested in this. However, right, most people think about NFTs as just images, and people are like, why would I want to buy an image when I could just right click and save it? Like there's a whole nother argument for another day on that. But what's really cool about NFTs, which just stands for non-fungible tokens, which means like the other tokens I talked about so far are fungible, meaning you can like one Bitcoin is like another Bitcoin. You can exchange them. Okay. Non-fungible means there's no two that are alike. So that's what NFT stands for. But outside of just these pictures and the CryptoPunks and the Bored Ape Club and some of these other things, there are real world utilities now where you can have an NFT and people are doing things called token gating or NFT gating, meaning you don't get access to information, or like on Discord, this happens a lot. You can get access to different parts of a Discord server, different conversations on there, if you have a specific NFT, and they have bots that will check your wallet. Usually, and I know for some of you are like, oh my gosh, this sounds like a foreign language, but basically it's like having a VIP pass to get access into a club, right? Think about a long line outside a popular nightclub, right? And you just walk up and kind of like flash your badge or flash your ID or whatever. And they're like, oh, cool, Mr. Gambrill, come on in. And they just let you behind the velvet rope and you go right inside. What some NFTs are starting to do is, again, NFTs are built on smart contracts and some other things, but you could say, hey, I'm going to give access to this intellectual property or this particular course. Those of you that are speakers, trainers, coaches, consultants, whatever, you could use NFTs. Tom Bilyeu is doing this in his Impact Theory group. He has some NFTs out where he's doing this. I think Gary Vaynerchuk's talking about doing it or has done it. But this idea of like, if you hold this NFT in your wallet and you go and they have a live event or something, like you will always get access to their live event. You won't have to buy a ticket. They'll allocate a certain amount of tickets for their NFT holders. You might have to reserve and say that you're coming so they know that you're coming, but like you won't have to pay extra. You'll just show your NFT. They'll let you in, right? So it's kind of like a ticket, like VIP access to things. CoinGecko does it on their Discord server with NFTs, right? If you buy similar things, one of the subscriptions I got, and then I got an NFT, and then I went back to their server and said, oh yeah, here's my NFT, and then I got access to a whole bunch more information on their server. PoolTogether has certain things in their Discord server where if you're holding the Pool token, you get access to stuff, right? And again, this is called token gating. Just you get through the gate when you have the token, whether it's fungible token or non-fungible token, NFT. So I think what we're seeing now, especially in the NFT space, is kind of like when the internet first came out, or even when personal computers first came out. People are like, what are we going to do with personal computers? They're like, let's put all of our recipes on there. And then when the internet came out, it's like, let's share all of our recipes. Like people are just thinking about what they're currently doing and then like, what can we do over here with it? And so they're just throwing all this stuff at it. But I think, and that's like linear thinking, but I think there's a lot of people who are thinking exponentially and they're going, whoa, what if we did this and this and this, and then we did this, and then we did that? Like, that'd be pretty cool, right? And so you might want to check out Tom Bilyeu's Impact Theory, especially his Discord as well. By the way, Discord is just it's a place for people to have conversations. It's kind of like those of you familiar with like Facebook groups or something like that. Discord is just another platform for that. And it's not as moderated as Facebook would be, right? You can have discussions about things that aren't fact-checked and all that other stuff. And so, again, it's a freer discussion, but again, caveat emptor, buyer beware, right? There's a lot of stuff that happens on these things that, again, because no one's checking it, or there's no oversight of it, right? There's a lot of crazy stuff that can go on there. So you have to do your own due diligence. Make sure you're looking through the information with a critical lens. I'm not going to say what's the word I'm looking for? I'm not going to say a jaded lens or like a super skeptical, right? But just through a critical lens of that information, like people could be trying to hype their own thing or whatever, because you don't have the oversight of like the Securities and Exchange Commission or some other things, right? So a lot of things could be happening where people are hyping up their stuff and then they hype it up to a point and then they sell it all, right? So you just got to watch that you're not left holding the bag, or you bought high and then you end up having to sell low and you lose money doing that. So to recap, cryptocurrencies and the blockchains, opportunity or distraction? And I say yes, there's a little of both. If you only had a finite amount of time to focus on this stuff, the examples I just gave you, the examples I just gave you would be good places to go check it out. If you just want to dip your toe in the water and buy some cryptocurrencies, check out Coinbase. If you want to be able to play in some of these other spaces like PoolTogether and DIMO and get on these Discord servers and have NFTs and token gating, you're going to need another wallet. Metamask is a good thing that you can use for that. And then just go play, right? To me, I learn by doing. And so I just put some money out there like, okay, what does it look like to buy this? And what are the fees and whatever? So you might want to have a little money to play with. Again, money that you're prepared to lose, right? because it's volatile and all these other things. But I think once you have some skin in the game and you are like, okay, this is kind of neat, and then you dig into the conversations happening on Discord, or you have, you put $10 into PoolTogether or $100 or whatever, and then you just watch it and you play each day and you're like, wow, this is pretty cool. Like, I'm starting to understand this. And then you get on their weekly call that they have on their Discord thing and you pay attention to what they're doing. Like for me, you've probably heard people say, if you're the smartest person in the room, you're in the wrong room. You need to challenge yourself and go learn and get in another room, right? You're not learning anything being the smartest person in the room. I honestly, in these Discord servers and some of these other conversations about some of the stuff, I literally feel like the dumbest person in the room. And at first it was really disconcerting. But as I started just listening and leaning in and participating and sharing some of my expertise or some of my take on things, or how I see things, and then people, people were saying, hey, that's kind of cool. Can you share some information over there? Do you want to get in this working group? Or, hey, we're going to have a meet and greet type thing online. Like, do you want to come to our happy hour online or whatever? I'm like, okay. So I'm meeting a lot of cool people, but more importantly, learning a lot of really amazing things from some super brilliant people. Imagine being able to go to like a big company, like a blue chip company, like, I don't know, Johnson & Johnson, or some other big company like that, and just walk in to their headquarters and go sit in on a board meeting, like just to sit there and be like, oh, and participate. That's kind of what it's like doing these things. And so obviously the first couple of times you went in there, you'd be like, wow, I don't know what's going on. This all sounds like a foreign language, right? That's been happening to me for a while now. But the two communities I'm most involved with, PoolTogether and DIMO, is kind of cool. And now I'm like, oh, okay, now I kind of know what's going on, and I can kind of explain it, and I can kind of help people on board to these communities, and I can kind of talk about it intelligently on a podcast episode, which I'm sure I probably got some of it wrong. But for those of you listening who've never heard it before, you're like, wow, this is amazing. What is that? So I would encourage you to just get involved, participate, get a MetaMask wallet, get on Coinbase, get on some of these Discord servers, put some money in PoolTogether, whatever. Again, I'm not making specific recommendations. This is just for example, right? Do your own due diligence. But I think when you start participating, you'll see there's some really cool opportunity here. And even if the projects that I've talked about or the other ones you decide to get involved with fail spectacularly, and you lose your $10 or $100 or whatever, I wouldn't look at it as losing it. The way I see it is I learned. It was an education. Like, I am getting, for the minimal amount of money I have invested in PoolTogether, I am getting a first-class education in how these autonomous organizations are operating, how their treasuries operate, how their governance works, how, like, tokenomics, like all these things I had no idea about a few months ago. Now I'm learning a ton, right? So I look at it as an education. Oh, and by the way, I happen to be getting some money or earning some interest or getting some tokens or getting some other financial benefit. But for me, it's just being able to stay at the tip of the spear. So when this thing starts to cross the tipping point, because it will now, like, this whole space is hard to ignore. It has gotten a foothold. There are big traditional financial institutions and stuff putting a lot of money behind these projects, and big, smart entrepreneurs, Mark Cuban being one of them, putting a lot of his money into these things. You know that those folks traditionally don't invest in stuff if they haven't done their own due diligence, right? And so it hasn't quite reached a tipping point where everybody's jumping in, because there's still some friction in the space to get involved, right? To getting these different wallets and understanding how they work and all that stuff. But as that stuff starts to get ironed out and it gets a little bit easier to get into this space, some of these things are going to take off. And so you may want to at least dip your toe in the water so you're familiar with what's going on, so that you can capitalize on that stuff, so you can catch the wave, so you can be ahead of the wave, you can see the wave coming, you can paddle out there, and so when the wave comes, you can ride it, right? Instead of waiting too long and missing it all together, or mistiming it and having it crash on your head, right? You don't want to have that happen either. So this has probably been one of the longest episodes of my podcast I've done, but I think it's important that I've seen this conversation happening online in a bunch of different spaces, and I wanted to make sure that you were aware of this stuff, aware of both the distractions so you can kind of shut them out, but more importantly, the opportunities so that you can capitalize on them, which will help you unleash your awesome on the world. See ya.
Thanks for listening to Unleash the Awesome. Please be sure to subscribe, rate, and review wherever you listen to your podcasts. And please share us on your favorite social media platforms using #UnleashAwesome.